Well, g'day there traders. Thanks a lot for joining me as at this Monday afternoon market recap. There is about 30 minutes left of trade in today's session. However, I think we've got a good understanding of just what is going on at the current junction. Now, over the weekend, I spoke about potential early week weakness, so to speak. Now, what's interesting about this is that we did get a gap to the upside, but really, or relatively quickly after that, we did begin to see sellers take control of the market. Now, with 30 minutes to go in today's session, you can see the Dow Jones Industrial Average is down roughly 86 points. This is quite interesting. We have been speaking about the retest of this support area, but the market I want to focus on as at Monday is that of the NASDAQ. Again, speaking about this over the weekend in Pro, we identified that we did have an open window, and we should see sellers gravitate anywhere in this area until we close this window. So it looks as though things are going to plan, so to speak. It has been a relatively inactive session. You can see the NASDAQ, the net movement today so far is 34 points to the downside. But what is most important is going to be what happens once we close these windows. It looks as though we could even potentially do that today as at Monday. If not, it may happen in the first trading session of May. Now, this is also potentially going to correlate with, again, that old adage, sell in May and stay away, or sell in May and go away, so to speak. But what you may find will happen very, very quickly is that if we do see continued selling pressure into the beginning of May, and if the support area does hold, and it looks as though, or at least indications at the current juncture indicate that we are going to hold this support area, you can see, of course, the dynamic of the market flip very, very quickly. So really currently at the moment, we're simply sitting through a lot of this sideways chop. We've identified that we have been in that of a relatively messy market since bouncing off the lows very early in the month of April. However, unfortunately, we still find ourselves in that current type of market environment. Now, if I start oscillating, first of all, let me just move into GLD and SLV. Again, we saw a little bit of weakness today, an initial gap down, but a beginning, or at least the very early stages of that of a reversal. You can see a very nice white candlestick. This is showing up right around the pivot of 124.50. Now, although this is technically a bullish candlestick, it is showing up at the right location. You have to understand that the US dollar is still moving through that transitional sort of process upon which it's in that of sort of a minor and also an intermediate level push to the upside. However, on Friday last week, we began to see that of a shooting star, and I spoke about how this is going to be a process which plays out probably over a number of sessions, if not a number of weeks. So the US dollar still is relatively strong, and again, you saw the weakness flow into GLD and also SLV. That began to shift, or at least in the commodity side of things. However, the US dollar still remains up, so you have to expect, although we are seeing that of white candlesticks begin to develop both on GLD right here, and also if I can bring up the chart of SLV, you can see the gap down again, but the candlestick body is still white. You still have to expect that we are going to linger around 1530, and the other pivot that I just identified for you moments ago on the GLD symbol as well. I think this is going to be a phenomenal trade moving forward. We are getting very close to it. I'm paying attention to GLD over SLV. You can see that we're very close to that green rectangular box, but again, this is going to take a little bit of time until we really get sort of, or at least we begin moving, technically speaking, in the direction, or at least in on the momentum that we're sort of looking for, and that's going to be ultimately to the upside once we see the US dollar flip and the holding, or at least the quick breakdown of the support area on GLD and SLV. We can go as low as roughly 122, maybe even 121. So that's still roughly about $4 away on the ETF itself. That's a relatively large move. But if we start moving back down into this green box, it's going to be potentially a phenomenal opportunity to begin entering into positions, but only when we see the US dollar begin to reverse. Now, I've recapped the Dow Jones Industrial Average. I'm very excited about what happens on Tuesday. More specifically, though, for the NASDAQ, once we do definitively close this window, we could see fireworks very quickly begin to see a bounce off from this area of support. But again, time will tell. We'll obviously look at this come the close on Tuesday. What's interesting is that Apple is set to report earnings. That's going to be most likely a market mover. We haven't seen Amazon continue to the upside yet. It looks as though, again, this is correlated with my understanding of the NASDAQ at this time, that we are going to come on back down and potentially fill that open window there. The same is true for a couple of other stocks as well. You can see, pardon me, Boeing Airlines still technically moving sideways. We've got Baidu, which is still holding up. We came back down to try and begin sort of filling that open window, but we held. which is pretty interesting to note as well. We are down $2.30 as at this recording, but we haven't definitively broken above that peak. However, I will not be taking the trade as it is a dashed line. So I want you to understand that. Caterpillar still largely moving sideways. No real momentum there. COP holding up. This is in alignment with those rising exponential moving averages. I really like the setup on COP moving forward. So that's something that I did speak about over the weekend. We've got CVX, and this is very important also. I mean, I might as well stop and really sort of, or at least give you more of an explanation as to what I'm seeing on CVX. CVX did have a gap up last week with its earnings. However, the risk and reward ratio that we identified over the weekend really made this trade unjust. It really wasn't worth putting any capital into the trade. The reason why was because we were essentially in no man's land between our target up here at 130.79 and really where our next level of support is. This is coming in at about 124. So you can see that if you did place an entry above the high of Friday's candle, you would have been whipsawed. And this was a fairly lengthy discussion that we had with the market. We weren't looking to get into trades that weren't necessarily breaking out or didn't have great structure behind them. The reason for that was because we're still looking at this market short-term bearish until we see some of these open windows comprehensively or ultimately fill. And again, this is just a process that the market is going through, hence why the markets themselves today have been relatively inactive, or at least that original gap up has been sold. We've got Google, pardon me, I was going to say CVX. Let me just jump into CVX actually, or we've just done that. Let me move into Google. You can see for yourself that Google also, we spoke about, we're looking for this secondary retest of this 1,000 pivot. Now we're trading at 1,023. We're $23 away from this pivot. It's going to be very interesting. I still think, and I have said, that Google's going to come back down and tag that 1,000 area. And that's in alignment with a lot of other tech companies as well, filling their respective gaps. So it looks as though we still have initial selling on the immediate horizon, but I do think it's going to be bought. Goldman Sachs is still setting up some form of a little stair-step type of pattern. We have IBM as well, which is down today almost $1. But again, we're still holding this 144 pivot. This is just a process that IBM is going through. What you should pay attention to is the Bollinger Bands. The Bollinger Bands are quite separated at the moment. You can see 161 all the way down to 141. That's about a $20 range. What will happen is that they are going to turn up, or at least the bottom band will turn up and the top band will turn down. And this is going to set up a Bollinger Band squeeze, all right? Otherwise, we're going to tag this support area and then it'll be looked to bounce. That's going to be the trade moving forward. And ultimately, it should take us all the way back up to about $158 per share. Now, Netflix, again, very similar to the previous stock that I mentioned in terms of a warning candlestick. CVX, remember, about the high, we didn't do it because the market was looking to backtest those open gaps. Well, if I go into Netflix, you can see that essentially we're in the middle of no man's land as well, hence why we have this dashed dotted line. So we got very close to tagging it today on Monday, very close to, you know, essentially producing a whipsaw that I think a lot of people, not in pro, but out there in the world, would be looking to sort of, or may have accidentally sort of triggered themselves into if they wanted to buy above 319. But you can see that we're still seeing sellers. We've got this upper wick, a little bit of a spinning top candlestick as at Monday, but no real follow through whatsoever. We're only up $1.19. Again, this is largely just doing what the market is doing, and that is absolutely nothing. We've got Tesla moving sideways as well. This is going to be interesting. There's two stocks, Tesla and Amazon, which are reporting this week. That's in our definitive top 12 list. I do also want to make a note about some of the stocks that I've narrowed down. Now, in one of the past videos anyway that I have put up on YouTube, I showed you a list, and the list may have been about 20 shares deep of potential sort of or additional stocks that we might look at from time to time. Now, over the weekend, I did go through and I looked up, I guess, the trading nature behind all of those individual stocks. I also went through the option change just to make sure that they are optionable. Okay, I want to make sure that the stocks are disciplined and that they are optionable as well. And I've narrowed the list. I'm just looking at it in front of me. It looks like I've got about 9 stocks here, and I'm just going to write the ticker symbols on my computer. I've got Alibaba, which again is set to report earnings, I think, within the next week. We've got Facebook, which has reported earnings last week. We've got LUV as well. We've got DAL. We have LOW. Let me just have a look. We've got PayPal as well, PYPL. We've got Abbott, ABT. We have FedEx, FDX. And the final stock that I've narrowed it down to is TWX, which is Time Warner as well. So let me just count these. There's 2, 4, 6, 8. Yeah, there are 9 stocks here. So this may be a little hard to read. I get that. Let me just repeat them. TWX, LOW, Alibaba, PayPal, Facebook, LUV, DAL, FedEx, and ABT. Now, if you are watching this video all the way through to the end, I mean, you can comment in the, comment section below as to what you would like to see moving forward. However, what I think I will do is provide you with some analysis moving forward on all of these stocks and just show you, or at least give you my feedback as to trade setups on all 9 of these stocks. Some of these are actually ready to move, which is interesting once the markets pull on back down and begin to bounce off their respective support areas. So this is going to be a video that I will record within the next 24 hours, and it's going to be analysis probably on all 9 of them. And I think it's going to be very helpful for a lot of people who've emailed in with, their suggestions as to what to look for or what to look at moving forward. All right, so I just wanted to write that there and keep you updated on that. Goldman Sachs is going to be gone, by the way, by this weekend. It's not going to feature in our pro analysis class this coming Saturday. So it is going to be one of these 9 stocks that will fill the void. All of these are quite good actually, but I do have personally some preferences as to some over others. But if you want to anyway, write some comments in the comment section below. So on that note, everyone, I'm going to say goodbye to you as at this Monday afternoon market recap. I'll be back with you later in the week for some more market addresses. All the best. It's James signing off on behalf of Pivot Point Trading. Goodbye.